Joining me now is Scott Williamson. He's the managing director at Blackstone Minerals. Good to see you again, sir.
Yeah, thanks for having me, Mark.
Now, for those who may not know the story that well, we did talk to you a while ago, but let's remind everybody and refresh our viewers in terms of the goal at Blackstone, which is to be a net zero producer of nickel concentrate for battery makers by 2025. Give us an overview, if you could, please.
Yeah, thanks, Mark. So we've got the previously operating Ban Phuoc nickel mine in northern Vietnam. And so that operated between 2013 and 2016. So we're looking to restart that mine, but we're also looking to build a downstream refinery, which is integrated with that mine. And the benefit we have is in the Son La province of Vietnam, in the northern Vietnam region, we have two of the largest hydropower plants in Southeast Asia. So that's really driving a big part of our green credentials. We're focused on electric mining fleet and really pushing the CO2 footprint of our nickel to as close to zero as possible in the early years of the project. So we're well developed down the process now. We've completed a full pilot plant on that downstream refinery. We're at the final stages of the definitive feasibility study, and then looking to move into the build phase over the coming months and years. So it's a really exciting project which we picked up about 3 or 4 years ago now. We've done about 100,000 meters of drilling, and we're now at the final stages of the study work to go and restart the mine and build a downstream refinery.
And Scott, one of the things you're planning is to have a multi-product strategy. So could you explain that and perhaps the premiums you're expecting to get when you are eventually producing?
Yeah, so the downstream business will take nickel concentrate or other feedstocks. It'll then convert them into an intermediate product called MHP, mixed hydroxide precipitate. That's also a product that we can feed into the refinery. Then we'll do further leaching and move it through the flow sheet into a nickel sulfate and a cobalt sulfate product. So those are products that we can sell. We can then, if we keep them in solution, we can then combine them to the nickel and the cobalt and bring in some manganese into a product called a precursor, which it has nickel, cobalt, and manganese in the ratio of 8:1:1. So we have a few different products. So nickel sulfate is a product we can sell, and cobalt sulfate. So those products tend to trade at a premium to the underlying metal value. The premium can be as high as 10 to 20%. So nickel sulfate is in high demand because of the battery makers. That's a product they can feed into their existing supply chains. If we keep the product in the flow sheet and in the solution, and then we combine it into the NCM 8:1:1, that product can trade at even further premiums on the sulfate products that go into that product. So the final product being NCM 8:1:1, that can trade as high as 20 to 40% premium over the underlying metal prices. So it's an interesting change to the nickel industry. Until now, nickel has really been about getting it to a metal and then selling it to the stainless steel industry. We've now got this brand new, I suppose, industry now for chemical products, but which are required for the lithium-ion battery, and that's what's driving these strong premiums. And if you can show really strong ESG credentials and low CO2 footprint, then you can definitely get those premiums and lock in those premiums because of your ESG credentials and the fact that you're also ex-China as well. So some of these products in China don't seem to get the premiums because a lot of that nickel is coming out of Indonesia and it doesn't have those ESG credentials. So it's really about the strong demand for these products, but also the strong demand for low CO2 nickel that has strong ESG credentials.
Right. You said you're going to be greener and cleaner than the old way of doing things. And as you said, you've got some optionality there. Now, you've also said you're in the final stages of negotiating with battery makers as potential offtake partners. You've said you've been meeting with some South Korean groups. So could you update us on that process?
Yeah, so I was in South Korea last week. We've been working with a number of groups in South Korea over a long period, maybe 3 or 4 or 5 years now. So we've been updating them as the studies are progressing. It's now getting to the final stages of studies, so it's now time to really lock in that partner and or partners. So we're now opening up that search radius to include other jurisdictions. So until now, we'd only focused on South Korea. We're now starting to open up the search radius to include Japan and China, OEMs out of the US and Europe as well. So it's really a opening up that search radius, making sure that we get the right partner to go and build what is a mega project. So this is a big project. So we need a big partner. So we're talking to some of the biggest groups in the industry. So we are getting down to some nitty gritty. We're looking at those premiums that we just talked about, all of those different things that go into a final product and an offtake scenario. So one of the things that we've done is we've not given away our offtake lightly. So what is a big part of our story is the ability to sell that offtake or the rights to that offtake and get a good funding package from these partners that will be linked to those offtakes. So it's not just about getting the offtake; it's about bringing the capital and also the technology that some of these groups can bring also to produce that final NCM 811 product. So a lot of these groups are either battery manufacturers or cathode manufacturers, car manufacturers. They can also bring some of the technology because different car manufacturers, different battery manufacturers are after different ratios in that NCM 811, or it might be a slightly different ratio. So it's important to lock in these partners and then move into the financing together as a joint venture over the coming months. So yeah, it's we're getting close, and we're actually starting to open up the search radius, which should put a bit of pressure on the process and make it a really competitive process. And looking forward to being able to finalize that over the coming months.
Right. And if you could flesh that out a little further. So it's clearly not a matter of finding a partner and partners just because they're first come, first serve, or they're offering the highest number. And you can speak to this better than I can, but you're obviously looking for a partner and partners based on their needs, their technologies, what products they might want to have you produce, correct?
Yeah, and that's really important. So some battery manufacturers are focused on high nickel cathode. Some are more focused on LFP, which is a different product. So it's really about finding those battery or car manufacturers that are focused on high nickel cathode. So it's really the premium brands. It's the vehicles that want long range, they want good performance. So it's some of the more premium brands in the electric vehicle space, because the nickel will give you the long range, it'll give you the strong performance. The other most important part is we need a partner that's focused on ESG, that is focused on a net zero CO2 footprint. So and that really is the premium brands again. So those premium brands, they don't want to tarnish their reputation with nickel that doesn't have the ESG credentials that we can offer. So it's really about those premium brands, but then linking it back to which battery manufacturer is that particular car manufacturer working with, and it's really about bringing all those pieces together. So that's why it's taken a long time. We really need a full supply chain. So you need a cathode, you need the battery, and then you need the car manufacturer, and you need them all aligned on which chemistry mix. But then also they have to be aligned and focused on low CO2 green nickel as well. So that's an important part of our partner search process.
Right. So that's a two-way street in terms of these potential partners looking at Blackstone Minerals and your green credentials. How attractive are you seeing those be to these potential suitors here? And maybe you can talk more about that. And are they mostly coming out of Europe and Asia? I know you've been opening up the process lately.
Yeah, so we're very lucky. Our main competitor, really our only competitor, is Indonesia, and unfortunately, their ESG credentials are nowhere near as strong as ours. So we're very lucky that we can really pitch ourselves as a much cleaner and stronger ESG story compared to Indonesia. So, for example, the nickel laterite process, which is used in Indonesia, from what we can see, we'll never be able to get the CO2 as low as we can because we have a nickel sulfide and connected to the renewable power. So that benefit of having nickel sulfide and renewable power means that we will have the lowest CO2 footprint in the industry. And that sort of puts us in a really strong position in these negotiations. So what we're seeing is they're now starting to put threshold limits on that CO2 number. So and we think it's probably coming from Europe, and the European car manufacturers are coming to the battery manufacturers and saying, you need to have a CO2 footprint of X or lower, otherwise we won't be able to take your nickel or even lithium. So it's really about that whole battery CO2 footprint. And the nickel is the highest contributor to CO2 in the battery. So there's a lot of focus on the CO2 of the nickel. And so, yeah, we're very lucky that our main competitors are Indonesia. For example, their carbon CO2 footprint is between 2 and 6 times as high as what we can offer. So particularly the higher end of that range is just not going to be acceptable to a premium European brand or US brand. So, but yeah, it's really about targeting those brands that are focused on low CO2, and it's all the names that we all know, and they're brands that just can't be tarnished by having a bad reputation by taking low ESG credential nickel.
And lastly, Scott, you've said the market is waiting for a few things from Black Stone Minerals, the partnerships that you've been pursuing and talking about here, funding that would come along with that, and also the definitive feasibility study, which you've said you hope to have out sometime in the middle of the year. So once you have all those announcements out there to the market, how significant a re-rating on your stock do you think you could achieve?
Yeah, so we are getting close to that final definitive feasibility study over the next few months. The partnership is really what unlocks it. So the study, unfortunately, is not going to rewrite the market. It's just another study, and it hasn't changed much from the pre-feasibility study. So there's nothing too exciting in that. But once we can show the partner, then it starts to unlock the NPVs of the project. So if we look at the pre-feasibility study, we're looking at around a $2 billion NPV. So I suppose the goal for me is to allow the market to see that NPV. At the moment, the market's not focused on what that NPV is because it doesn't think we can build this project. So if we can bring in the partner, show that this is funded and it will be moving into production and then move it into production, then we will trade at a much higher multiple on the NPV. So for example, a lot of developers, once they're funded, will trade around about 0.5 times NPV or maybe even higher. And then as you move into production, a lot of producers trade around 1 times NPV or slightly lower. So it's really about trying to access that full value of that NPV, which is in the order of $2 billion. But at the same time, we have to minimize dilution to shareholders as well. So it's a juggling act. We want to start the mine and start building, but we also don't want to dilute the shareholders at these low levels. And that's why we're bringing in joint venture partners at the asset level, and so really unlocking that NPV, but trying not to dilute the shareholders at the corporate level, so that you can get that NPV at a lower per share basis so that we can get a much higher share price. So that's what we're trying to do. And it's an exciting period for us.
Absolutely. Well, thank you so much for the update, Scott. We'll be watching the news flow and we'll talk to you soon.
Thanks, Mark.
Okay, Scott Williamson, Managing Director at Black Stone Minerals.